sitting over in my P&L, which is set through the transfer price. So I'm already being compensated by my parent company for this expense that I'm doing. So why do I require a separate payment? A valid point. But tribunal in its wisdom again said that just because you are earning a higher profit does not mean that there should be no AMP adjustment. This is a completely disregard to the fact that even the OECDs of the world have said that it is not required that a separate payment should come to India or separate payment should be given to the guy who is doing an AMP spend, if at all. If you are adequately compensating him through the transfer pricing, the story ends over there. Story just ends over there. Because how does it matter? How does it matter if I give 2% plus 13% or I give you an additional 10% in your sales? I am giving you the return. What more do you require? But no, we are Indian tax authorities. We want to be smart, and we are saying these things. So this is where the tribunal, to my mind, has gone wrong in not appreciating things. Any thoughts, views? It's a Friday morning.
But there was no discussion whether the owner of the brand had any direct business or anything like that. And there is nothing whatsoever. No business whatsoever. What is the?
Unfortunately, I think this is where probably the representation which was being done by the company was a bit laconic. They could have actually argued this. Because if you look at the other side, the way I would have argued, let's say LG India is acting as a licensed manufacturer or as an entrepreneur. As an entrepreneur, I am supposed to take the call. How much sale should I do? How to sell? What market in which I should go? How to promote my product, etc., etc., etc. The only limited transaction that I was doing in this case was importing raw material and paying a royalty. So if I justify that the royalty is at arm's length, if I justify that the imports are at arm's length, when let's say taking the overseas entity as a tested party, it's a overseas entity is a contract manufacturer, I test him appropriately and say that I have given him the right return. I have also done the arm's length benchmarking for the royalty. The story ends there. What is the benefit which is going to the other side? Because any benefit which is accruing to a distributor or an entrepreneur is staying in India. Let's say, unlike a case of Glaxo, just go back to the facts of Glaxo. Glaxo was a distributor, and that incremental return which was coming from this additional AMP was going back to US, was going back to UK, and US was getting that 3% return. But unlike that in India case, India is an entrepreneur. So whatever incremental profit or incremental sales are arising, the benefit of all that is staying in India. The only differential which is going to the other side is royalty. I am saying that royalty is at arm's length. The story ends. That purchases are at arm's length. The story ends. What is that incremental benefit that I am passing to the other side? I fail to understand. Probably this is the line of argument which was not told. So that is where the disconnect was. In fact, on this last point of higher margins, I would like to bring across. After this special bench ruling, there is one ruling which has gone in favor of the company or in favor of the taxpayer, which is BMW. So in case of BMW was acting as a distributor. And in case of BMW, it was argued that BMW is getting an extra return. So BMW was getting a return of, let's say, 6% net profit, 6%, compared to distributors who were getting, let's say, 2%. So it was argued that even if I am doing an AMP, I am getting compensated by the parent through that transfer price. Additional 4% is coming to me. So there should be no adjustment which should have been done in my case. And that was upheld in that case. In BMW's case, this principle was upheld. But after BMW, if I talk about almost, there have been close to some 25 odd rulings which have come on the subject. All of them have upheld these principles of LG blindly, I would say, and said that this will, we will do an AMP adjustment or we'll uphold the bright line concept, etc. Nobody has appreciated all these arguments, saying that it's a special bench ruling and we will apply. The interesting point was when this LG was delivered, there were many more participants because this was a special bench. But when the verdict came out, the tribunal said that this is a fact-specific thing, and the verdict of this judgment will apply only to the facts of LG and not to anyone else. But in case of Canon, or sorry, it was in case of Casio, the tribunal, the Bombay tribunal said, because the bench member was saying, Mr. Sayal, he was on a special bench of LG and he was on the special bench of Casio. He said that principles of LG will apply to all people, irrespective of your distributor or a manufacturer or an entrepreneur manufacturer or a licensed manufacturer or a low-risk distributor. Whatever your characterization is, the principles of LG will apply. It's a blind statement he has given, or a blanket statement he has given, which applies. So this LG or this principles are to apply to all. That's what the view is as of now. Unfortunate, because as I said, if you look at licensed manufacturer or an entrepreneur manufacturer or an entrepreneur distributor, whatever excess profits are going to arise as a result of your AMP are staying with you. Nothing is going to the other side. What are we talking about? And globally, if you see the bright line or the AMP's thing, it's never applied in case of a licensed manufacturer or an entrepreneur distributor. It's always applied in case of a low-risk manufacturer or low-risk distributor. Because what the principles of Glaxo, where the low-risk distributor was just getting that 3% and the balance is passed to overseas side, on the other side, that's where this whole issue came up. So in my humble view, the verdict of LG is a flawed verdict, unless you disagree with me.
I think High Court will back.
Okay, I'll answer his point. He's saying, can we refer it to High Court? Yes. In case of Canon, this matter has been accepted by High Court, and there are 5 questions of law which High Court is going to look at. The hearing was supposed to happen on 18th of April, if I'm not wrong. 18th of March, I'm sorry. But it has not happened, so we are yet to hear what they say. Because in case the 5 questions which have been referred, they are saying that is bright line the right test? Can bright line be applied to everyone, irrespective of characterization? Is AMP the right way to do an adjustment? And is the characterization of the entity relevant? These are some 5 questions. It's there in slides, but yeah.
Sometimes a product might be of such nature that it might generate extra sales for the company. The nature of product can also help in making huge profits.
Yeah.
As in the US case, the product might be such, it must have done well. People might have by word of mouth the marketing was done.
Can you just quickly repeat so that everyone is aware? It's a relevant point.
My point is that sometimes the product is so good that even though the company is incurring a certain percentage of the AMP, but because of the product, this huge amount of sales is being generated. I mean, we can take an example of iPhone. The product is so it had generated huge sales. So in that case, what is the stand of the AMP of the?
See, howsoever product might be good, how did you come to know about iPhone?
My iPhone is just let's
No,
say
you
the
said-
starting point of the Apple turnover. We can the iPod which we got. The product was such that
No, fair enough. Fair enough.
Haan.
How did you get to know about iPhone or iPod? I'm sure Steve Jobs never called you. So how did you come to know?
The product was such iPod. The product was such having so many number of songs in this small device.
Right.
It is the product actually which generated the sales.
Fair enough.
So,
Fair enough. But how that? But question still is, how did you come to know? There you are. There is a classic saying in Hindi, right? जो दिखता है वही बिकता है, right?
In that case, mathematically, in your example, mathematically the AMP expense would be low. Such a company would not be facing a problem for an AMP adjustment. But there's one way to look at it.
Denominator.
Yeah, so because it's always a percentage of sales. So if my product itself is so good, then my AMP expenses won't be so high. So I don't have a problem of marketing AMP expenses. in the first place.
No,
So,
initially the product was being marketed, but after a certain point, there was no need to market the product. It can be that also, but the sales have been generated just by the word of mouth and because of the product.
So it's a fair point. Let me try to bring the balance, and it's a very valid point you have brought out. See, what is happening is there are some products which you don't have to advertise over a period of time. But every AMP, every marketing that you do has a shelf life. Has a shelf life. Especially if you are dealing with FMCG products or even the electronic products of today, it has got a shelf life. So no product will stay forever, or the memory of the recall memory of no product will stay forever. Let me articulate. Let me just articulate that. So initially, what you are doing is you are trying to promote that product in the market, because there has to be that AMP done at least once. Okay. So the point is, if the product is such that it's a blockbuster product and it can survive on its own for 5 years to come, in year 2 and year 3 and year 4 and year 5 you will not have an AMP. Then you are going to have an AMP challenge. Year 1 you have a challenge. And the whole issue around this AMP is that who is the brain behind this AMP and what is the benefit which is being passed. So if, let's say, the Indian guy sitting in India is actually creating that market for iPod. He is the one who is going out in the market, trying to do some displays, trying to set up some workshops, etc., etc. It's the brainchild of India, which has developed that aim, that brand for that product and the market for that product. It's not the overseas company. So the economic owner of intangible in this case is India, because he is the brain behind the India. He is also doing the funding for India, for this, promoting this product in India. Once this product is promoted, and I assume that iPod is a fantastic product, second year, third year, fourth year, fifth year, he does not have to do anything. So there is no question of AMP adjustment. Even in first year, I will like to differ and say that even though I have promoted, why should there be an AMP adjustment? Because look at my characterization. I was supposed to do it as an entrepreneur distributor at first. The overseas US was manufacturing it, selling it to me as an entrepreneur distributor, and I was selling it in the Indian market. Irrespective of the type of product which was there, my AMP was done at my behest. It was not told to me by the foreign company to do that AMP or the type of AMP. I did it on my own account, and the rewards which are there are staying with me. Nothing is going overseas. It was the other side, to the other side. So why should there be an AMP adjustment? Clear?
Sir, I want to just take one more.
Yeah.
You are taking the example of iPhone.
Yeah.
In case if we take the example of medicines, we don't do the advertisement of that. Still, the distributors, suppliers of drugs, they hire the salespersons and they go to doctor's place to promote that product. In that way also, that even the adjustments are possible.
Unfortunately, that is how it is happening. And I am handling some pharma clients. This is exactly line of argument we told that if you look at pharmaceutical products, pharmaceutical companies are actually banned from advertising their products,
Yes.
unless they are OTC. So you will see a product like a Vicks which is being advertised, but you will never see a cancer product being advertised. They are prohibited. They cannot. But they are still getting AMP adjustments because unfortunately, the way AMP is being done is it has reduced to a mere mathematical exercise. You are comparing the AMP spend with the AMP spend of comparables and you are making an adjustment. That's not how it should be. That's why you go back to that composition, because you rightly said there is a difference between the brand building efforts and selling and distribution efforts, which the tribunal has luckily recognized, and it has said that only the brand building expenses should be considered for AMP computation for the purpose of this adjustment, and any expenses that you are doing for selling and distribution should be excluded out of it. Let's say you do some give some discounts, dealer discounts, or you distribute diaries to your dealers. Those are not to be taken. Those are not to be considered because this is again a product selling activity or a selling and distribution activity. But if you are doing a brand building, like you are putting up a logo hoarding, etc., that is to be considered. The challenge is, I can do it for my own P&L, because I will know what is there in my P&L and what the breakup of that P&L. But if you go to comparables, I will not have that breakup, because as I said, P&L, there is no statutory regulation on how to classify your expenses under the P&L. So someone might classify discount as an AMP spend. There might be one line item, selling and distribution expense. That selling and distribution and promotion expenses can include anything and everything. That's a challenge. That is what I was saying, that reducing this exercise merely to mathematical number game is futile and unproductive.
I just had one point. In case of pharmaceutical companies, the advertisement is not being done to the general public.
Yeah.
Because they cannot go and buy whatever drugs they want to buy. The advertisement and sales promotion is done through doctors, various conferences. So that also should be taken for the AMP part.
That should be taken as an AMP part. Even the brochures which are being printed, that is an AMP. But see, the difference that I was trying to bring across is that when you do this comparison, if let's say there is a branded pharma, there is a company which is manufacturing cancer products, and a company which is manufacturing OTC, there is a difference. The AMP spend of this guy will be much lesser than the AMP spend of this guy, because he has to do advertisement, he can do advertisement, but this guy is not required, because his product plus the market and plus the regulations don't permit him to do things. So see, this is where I'm saying that qualitative analysis is required. Just don't start looking at numbers saying 3% versus 5% and come to an answer. That's not the right way. If you really have to come to answer, these are the qualitative aspects which has to be considered. There are 14 questions. Sorry, we are already reaching about 11 o'clock. There are 14 questions, and I'll just quickly summarize what those 14 questions are. The verdict in tribunal, the LG's case is that this matter has been set aside to the file of TPO for re-examination. And when the re-examination is being done, the tribunal has directed the TPO to look at these 14 questions. They are all there, but these 14 questions say they are essentially trying to understand in a bit more granular detail that what is the characterization of the Indian entity, what is Indian entity trying to do, what is the brand it is using, what is the brand promotion expense it is doing, so on and so forth, whether it is paying in royalty, etc., etc. So hopefully, once we get some verdict now from the High Court, and also that the TPO post these 14 questions, we'll have some more clarity on this issue. But at this point of time, the way it is happening, TPOs are doing a mathematical exercise comparing your AMP with the AMP of the comparables. Some of them are being kind enough to remove selling and distribution expenses while doing this exercise, and the adjustments are being done. That's where it stands. Any views, any thoughts, any questions before we move on to the next subject? Issue of shares. Good.
What is the status of that inquiry by IT?
Sorry? He has not passed an order. He has not passed an order. LG. Yeah.
I wanted to ask him this in brand promotion and product promotion. Now suppose that LG was there. So initially it was only known for its TV. Okay. And now company is incurring expenses for the promotion of TV. So that is a product promotion. But now because of that LG has become famous, and possibly that is a factor because of which LG mobiles are also recognized by people. So the point that I'm trying to make is that brand promotion is different, so then AE should compensate because brand as a whole is getting developed for more than one product.
If you were sitting with a TPO, you would have appreciated you. Because this is exactly what I'm talking about. No, that is not what it is. Think about it. Just think about it. The starting point for an AMP is what is your characterization. First place. Second thing is talking about your thought about brand promotion versus product promotion. LG as TV, fair enough. But when they launched their mobile products, mobile phones, what did they do? They said there is a mobile in the market without putting the brand of LG. see, because that's what I'm trying to say is that both go hand in hand. It cannot be that, you say just a mobile. You say it's, let's say X4. You cannot say X4 there is there in the market. Who will buy an X4? X4 with an LG, someone will buy. Or you put only an LG. What is LG? It's a manufacturer of electronic devices and products. That's why you go to an LG shop. So both go hand in hand. That is what I'm trying to put across. Yeah, please.
Also, to add to it, also if you look at it, when LG started selling its television in India, it never intended to look at mobile phone as an activity. So buying products developed also an incidental thing. So if it was you have to look at if this development has been done by the purpose of development of the brand, or this development is an incidental activity.
And also just one point, just last part, yes. What is the benefit which is going to the other side? AE. What is the benefit?
Possibly that sales of phone has increased or something. LG as a brand has developed, so other products are benefiting, or in the minds of people, you think LG as a brand, as a better brand.
Okay, very good.
That is the only benefit, that intangible benefit that is happening.
But who is getting the reward of that benefit? India is an entrepreneur. Who is getting the benefit? India. What is the benefit which is going to the Korean company? Nothing. Nothing. That's why I said, if Indian entity is paying the royalty and you demonstrate the rate of royalty to be at arm's length, that's done. That's over. You paid in 3%, or 3% is at arm's length, over. There is no benefit which is going to him. So where is the question of he reimbursing you for something? The simple logic in transfer pricing or any commercial logic, commercial discussion is, I will pay you only if I get benefit. If there is no benefit, why will I pay you?
There is some benefit. Why do you say there is no benefit?
Which is?
See, basically, when we are talking of Apple products, iPhone and everything over here, iPhone and everything. So it's fit in your mind that Apple has become a good brand, and tomorrow when I am going to US, I might end up doing a lot of imports or maybe buy a lot of products from there also, based on the brand that I have recognized in India.
Correct. Okay. Fair enough. But is it core or is it incidental?
It is going to be.
It is incidental. It is incidental. See, then we are coming back to fundamentals. Look at Apple India. Assume that Apple has an India operations. Apple India, as an entrepreneur distributor, did all the thought process of how to promote, etc., etc., and it is also reaping the benefit. It is not paying the other side anything; it is getting the benefit. Whatever it is paying, that's a thumbs in. The story is over. So any incidental benefit, like you going to US and buying a product from there, it's an incidental thing which is happening. Incidental. If you look at this guy, he is getting his reward. So just think about it, because if I start saying that everything is incidental and I should get paid for everything which is incidental, there's no end. Then the global profits. Then we will say that the entire profits of the world should be taxed only in India, because we are 1 billion population, and we are the one who is driving the world economy. Doesn't work that way.
Any percentage of royalty is the answer.
Justify royalty to be at arm's length and just closing it over there.
Any investment should be there.
Perfect. Yeah.
This royalty that we are talking about is for the brand. Or?
Brand and technology. Brand and technology.
Actually, I talk to you. With the name, when they give the name for the product like mobile, what they want to ensure is the quality. The name is a quality product. They may not do anything. They may not manufacturing mobile.
Yeah.
But by lending name, like India had a Bajaj Electricals example. They do product of their own.
Correct.
People still buy Bajaj because they build a brand. My characteristics and quality is guaranteed, and I guarantee the warranty. So for that itself, they get the payment.
Perfect. So let's just add to what he's saying. Just think about it. Will LG be able to sell its product if LG brand was not there? Think about a very simple example, and most of you sitting in this room will echo with me. If I have to buy a car today, what will be my first choice? A mid-sized car. I'll think about a Hyundai. I'll think about a Ford. Tata will be the last priority that I have. Yes. Why? Why Tata? Why not Tata's? Indian brand. The brand value of a Hyundai or a Ford is much more than India. And who has created that brand? Even before they came into India, there was no presence of that brand. So this is a precise point which was argued in case of Maruti Suzuki. Because in Maruti Suzuki it was said that Suzuki is actually piggybacking upon the brand of Maruti. But the point is, will someone buy a car if it is only manufactured as Maruti? No. It is bought because Maruti plus Suzuki. And people know that Suzuki is a global brand and it has a quality. So it's Suzuki which is piggybacking upon the brand of Maruti which is piggybacking upon the brand of Suzuki and not the other way around. That's
Kinetic Honda.
yeah.
When the Honda went out,
Yeah.
Kinetic didn't work.
Correct? Correct? That's the point. That's the point. So it is not that they are getting benefited, but the Indian entity is getting benefited. And the fundamental point again remains is whatever benefit is happening is staying in India. So why should someone else pay you for that additional effort? It's like this, that I will I will invite you for a dinner. I'll make you eat the food and also pay you on top of it. Why will I do that? Ridiculous. That is what the contentions of PPOs are. Yeah. One last question and we'll move to issue of shoes.
Sir, initially our advertisement expenses for a new person to build a foreign brand, it will be high. Subsequently that goes on reducing. But in my case, suppose it does not go. Means that brand is still promoted and I am incurring losses at the net level. So what can be the argument? My expenses are very high. It is more than suppose it is of 7 and my comparable it is 2 or 3. So what can be
The answer lies in your characterization. Characterization and setting the right TP policy. So, if you are a licensed manufacturer, you are supposed to incur losses because you are supposed to buy products which will give you right level of GP. And NP is something which you will take care of. And over a period of time you will become profitable. But if you are, let's say, a low risk distributor and incurring losses and not getting reimbursement for A&P, then it's a challenge. Go back to the example of Glaxo. Glaxo was acting as a low risk distributor, doing a phenomenal A&P, not getting rewarded for anything. That is where the challenge is. So the answer lies in characterization and the right TP policy. If you have these two, you should succeed at some level or another.
One small question.
Yeah.
What discussion, how do you look at Hero Honda brand? Hero Honda, then only Hero. Whether Hero has not promoted Honda brand in India when they were in the joint ventures.
No. See, the way I will put it, thing is, when Hero and Honda were there in this collaboration, again the point was that who was piggybacking upon whom, and what was India doing? If you look at Hero Honda, Honda was trying to take their technology, or Hero was trying to take their technology and trying to do that manufacturing in India, and the profits were all staying in India. Only the payment which was going over to overseas entity was again payment for technology fees. The royalty was being paid, which again is continuing till I think some 10 or 15 years. That's continuing till the time the technology is exhausted. Though India created a brand Hero Honda, and someone piggybacked upon someone, the entire residual profits or the excess profits which came up all stayed in India. They never went to Honda. So why should Honda reimburse me for that? The only payment which went to Honda was at 3%. And think about it. Because of that brand which was created, Hero Honda, even Hero is staying on its own now.
Honda is also staying on its own now.
Correct. But Hero is staying on its own. So Hero is staying on its own because what has happened is, of that all that spend which is created, there are two names which have got created, Hero plus Honda, right? So the Hero brand is staying still. Otherwise, if standalone, if Hero was not there with Honda, it would have been a Tata. It would have been a Tata. So the answer really lies in the fact that what is the characterization, why it is the, so go back to my same example that I am inviting someone to my place to have a dinner with me, I am giving him food and I am talking to